Yo, what is going on, everybody? Welcome back. It is Sunday, which means it is officially the end of the weekend. Thank goodness the new trading week is here. Started earlier today. So let's go ahead and get right into it, man. We're just going to go ahead and get down to breaking down what has happened over the last couple of days. Like I said, on Friday, if you recall, we were still just in this range. We were pushing up and we were pushing above previous highs that we had made on previous daily candles. We were unable to close above them on Friday. As you see, we pushed up to $85,309 and we settled and we closed at 83,983. Okay, so that was still closed below the high of Thursday's candle at 84,336 and below the high of Wednesday's candle at 84,539, right? So while we have gotten closes higher. That was Saturday. Don't count the Saturday. Excuse me. Obviously, Sunday's candle closed bearish, and now we are opening Monday's candle. We had a slight push down, which you probably can't really see. Let me zoom in a little bit. You see we got a slight, very, very, very slight wick down, which means that, again, there was not a lot of range created. So I wouldn't necessarily be surprised to see us push back down. And if we break this low, maybe we come lower into the 81,000 to the 80,000 area. But let's go ahead and just break it down a little bit. All right. So just make this a little bit more clear and clean. We obviously have our support that we have created and have not created a new support since then. So, we'll just consider this our support on the higher time frame for now at about 78,400 area, 78,375. We're now just kind of consolidating in this area. As you see, created support, created resistance, was not able to break down below this candle, broke back above, broke the highs, but was not able to close above the highs. And now we're just trading back within this range, if that makes sense. Okay, so we'll just go ahead and throw this here. Not really too concerned with this anymore. We've developed a whole new range that we can really focus on going forward. Obviously, we'll use candles to the left to kind of set targets and whatnot, but for right now, we'll go ahead and set the range here. So let's see, we got about 84,700 area. Go ahead and draw that line in there. All right, that's on the daily, right? So as you see, like I said, we're ranging. We are not making any new highs or new lows. We're just within this range, okay? And this is a pretty large range, right? This is a $6,100 range. If you go up to the highs, we're $68 or so $100 range. Okay, so we're going to go ahead and drop down now to the 4 hour. On the 4 hour, you see we consolidated over the weekend, broke down on an illiquid Sunday. Like I told y'all on Friday, we tend to get moves on illiquid Sundays, illiquid weekends, just because that's just how the market moves right now, especially with Trump's headline-driven narratives, right? So we came down, created support, had a wick that came all the way back up, took all this liquidity, was not able to take the top side liquidity here, settled back lower, but we have not been able to break through this area of support, and we're now creating another 4 hour support candle, right? So we punched through, closed back above here. So the reason why we wouldn't be taking shorts is because we didn't get a candle to close below this area of support. If the candle had closed stronger, like around 82,000, then you could expect a wick up and a continued push lower that would come and fill this area down here. But since we didn't get that, we're now just consolidating back in this range, right? And so there's a couple of different things you can do. Depending on how this 4 hour finishes, we obviously still have an hour and 20 minutes for that candle to finish. And then we'll get into pre-London. If it were to finish bullish and say we even finish a little bit higher, say we finished, up towards 83,470, what you would look for is a wick to come down. And then if price were able to continue pushing above this candle's high, you could look to take it to the 84,800 area, depending on what the lower time frame. Obviously, we have a massive rejection wick here, right? So you would be anticipating basically what we would be getting is a wick fill, right, rather than a rejection. However, by the same token, if we are unable to push higher and we close below this area here, around the 82,300 area, again, we have clean candles to these lows. We have a flat candle down here that could look to be taken. Flat candles are 50-50 whether they're going to be retraced into or not. But this would be the area that we could look to see about taking profits, see if we can hold this area as support. Again, that's only if we were able to break and close below 82,300, right? So far right now, it's looking pretty good to go higher at this point. So let's go ahead. This is on the 4 hour again. So let's go ahead and break it down even further onto the 1 hour. Onto the 1 hour, you can see we can make this little adjustment here. Even here, you can see we had a flat candle. So no range was able to be created here. Price pushed down, but did not maintain down. Created a bullish candle here. This would have been the ideal trade if you were going to take one, around this time. This would have been the optimal entry, breaking above this candle's high, and then you could have taken it up to resistance here and seeing how it reacted, if it wants to push higher and continue up into the 84,175 area, right? At this point, though, we got 1, 2, 3, and this would be the 4th hourly candle created, and we are not at a high volume time, right? So for me, this is really just a no trade area, right? There's not really anything to do until we get a higher volume session to come in. Again, we could see about pre-London, but me preferably, I like to wait until at least London Open, and if nothing is setting up, then I wait until New York Open, New York London crossover, right? But yeah, so this would have been the ideal entry to take basically what is an impulse entry above these highs. You could have then, if you missed this one, you could have taken this trade here. It closed pretty strong, but we are coming up into a resistance area, so it's kind of dicey, right? Again, this would have been the ideal area. Take it up, and then you could have closed it even here in this area or taken partial profits or something. At this point now, I think it is too late to get into longs, or it's not too late, but it's risky, right? So what you would want to see is price to come down and either hold this as support and then go in again, or you want to see resistance be formed here, something like this, and then price to not be able to break this low, price to respect this low, and if price continue to break above this high here, you could look to take a trade with your stop loss below that low, below that candle's low, and see if you can get it up into the 84,700 area, maybe even only take it up to the 84,200 area, just because of where resistance is looking like. Right? Yeah. Again, you could take this if it broke above its high, but it's risky. Still, you would have your stop loss below this low. If you were anticipating that price is just going to continue moving up in this one candle, could do that. All right. We still have 15 minutes until the close, so I wouldn't be doing anything until the candle closes. Even on the 15, you see we got, even coming down into the 15 minute, we have resistance being created right here. So we would have to see if price is going to be able to break this and retest and hold it, right? And then you could look to go long again up to this area, or you have to see if price is going to do something like this and then reject the area and then break back down. We just have to see. All right. So in my opinion, the best thing to do right now is just to wait for, honestly, I would probably wait for a New York Open, But again, if London presents an opportunity, London is always a high volume session that you can get some really profitable trades out of as well. Yeah, so that's kind of the breakdown, the gist here on Bitcoin, really what I would be looking for. So yeah, kind of, I mean, right here where it is right now, there's nothing really interesting to me, right? I would just be waiting. I don't see what I want to see, so I would just be waiting. By the same token, again, if we're able to form resistance here, we could take it. We could take a short back down to this 82,000 area. If you don't feel comfortable shorting, you can just wait and see if we get a retest of this area to go long as we hold it. Or you could just wait until we get a close, a candle to close like this below this support area, right? You could wait to see if we get a candle to close like this, and then you would be anticipating that the next candle would wake up and would break this low and be able to travel back down towards this 80,000 area, right? I hope that makes sense. Otherwise, right now, again, just wait. We just wait. Does look promising though. If we can get a good candle to close above this 85,000 area, I think we should be able to move up into the 90K area personally. I would like to see us get up here, and even if we consolidate, break through, retest, and then get on out of here. That would be sick. Otherwise, we could see something like this. Again, like what we've been having, resistance form. And then we would look to go short. Until, really probably until New York session, I don't really think there's much to do. We also got to remember that there's a lot of news coming up this week. We do have, let's see, we have core sales tomorrow, and I believe, so we got CPI, Canadian CPI on Tuesday, but then Wednesday we got FOMC, right? Oh, and we got a Bank of Japan press conference. So there's a lot of volatility in this, a lot of volatility coming up this week, right? So, and then I think Thursday we do got more unemployment on Thursday. Ton of news coming out this week. So this week should be pretty volatile, and hopefully equally as profitable. If you play it right, it should be equally as profitable, right? Okay, so that was kind of the breakdown on Bitcoin right there. Right now, we're kind of just ranging. We got to figure out what it's going to do. Again, taking longs at this point could be risky. If you are anticipating a wick fill up to this area, you could take longs if we get a break above the 84 or 83,500 area. Depending on how, again, this 4-hour candle closes. You don't want to do anything until this 4-hour candle closes at least. Get a wick down and see what happens from there. Otherwise, you just wait. You wait until you get clear confirmation of either a break below this low and a continued push down to take these clean candles. We have to wait and see. Again, sitting on your hands and doing nothing is the hardest part, but that is the most essential part sometimes. Most of the time, I should say. All right, so that's Bitcoin going down from the daily down to the 1 hour. Go ahead and take a look at ETH now. ETH still sitting in a beautiful range. I don't really think that I need to go, top down on this. It's pretty obvious, right? We're consolidating. We're moving inside this channel. We have made several attempts at this low and have held them really strongly, even these, which is encouraging. But it's encouraging outside of the fact that it's Ethereum, right? The discouraging part is that this price action is happening on Ethereum. So just as easily as this flat candle is created here, we could, boom, come and fill it and fill all the way down, right? Knowing Ethereum, we could definitely do that. Honestly, I think I would prefer to have price either consolidate here or push a little bit lower going into FOMC. That way you kind of get an idea of what FOMC is going to be like. Because I feel like if price is if price postures bearish going into FOMC, meaning if price gives us the look that it's going to come down here and go lower and break before FOMC, I would anticipate that price goes like this and then yank goes up instead, right? Because if you're posturing a certain way into a big news event, and especially something like FOMC, given that we are coming towards the end of Q2, all of of Q1, all of the negative price action that has been going on, I wouldn't be surprised to see something like that. But that's neither here nor there. We're gonna have to see when that day approaches. So as far as breaking down the chart is concerned, we've just been ranging between 1953 and about 1850, the 1850 area. Okay, it's not again, zones are not a specific price point, but they're an area where prices interacted often, and you can see that we've just been moving up and down in this range, right? Playing the range really well, actually. Really, really well. So again, here it's kind of ugly trying to get a trade at this point. If price were to break above 1915 after creating a wick that respected this low, then you could anticipate that we are going to fill the wick a little bit higher. And you could take a trade here at this high, at the break of this high with the stop below the low. For me, it's a little bit risky just because I don't really like the way there's not really like clean price action over here, right? It's really muddy. This is really muddy. This is tight price action. And as I mentioned to y'all last time, I like to have some space in between candles to get really good, solid, identifiable movements, right? And so this is just not enough space for me. So maybe if we were to just consolidate here a little bit and get smaller and smaller, and then boom, we could do something like that. That would be cool. Or if we came down here, that would be cool. Or if we just kind of drifted our way up, rejected here, that something like that would be cool. You know what I'm saying? Like you gotta wait until you get structure that you want to see, and this is just not structure that I want to see. But with that being said, let's just go ahead and break down. Again, we're in the middle of the range, and like I told y'all last week, when you're in the middle of the range, you do nothing. This is dead set, pretty much in the middle of this range, right? Like I'm sure if I even from here to here, this is what 5% range, and we're sitting at about 2.5% of the range, right? So literally right dead in the middle of the range. So what do you want to do here? Me personally, I don't want to do anything at all. I don't want to get involved until I see some more favorable price action. Okay. So anyway, dropping down to the 1 hour, you can see that we're creating resistance here. We have a pretty clean run of bullish candles that we could start to see get filled if we reject this area. See if we're to create say the candle finished like this here. If we are able to wick up and create a candle like this, right? And you gotta say you got a wick that respected the high of this candle, right? That didn't break above it. Say you got a wick that went there and you got a candle that broke below, then you could say you can anticipate that another wick is going to be created to the upside and that we might come lower like this, right? So you just got to be, again, aware of what you're looking for. This could be very well possible if we were to break below this this candle's low that was made, because if price is going to continue bullish, it should not break the previous bullish candle's low. Otherwise, it has the potential to reverse and go down, right? And even if you see, like, just in this, the way this looks, we're making like your classic M shape. I know people like kind of look for that, but you can see where that would be something you could look for, right? Again, I'm not looking for anything right now, but these are just ideas, things that I'm looking to see form. Otherwise, you would want to see something like a bearish candle form here. And even if it were to break this low, say price for some reason didn't break this candle wicks low and then finished back up here and finished bullish, right? Then you could look to see maybe if price were to break this candle's high, if we could go and fill the wick, right? Fill this wick and see how price reacts from there. That's one way you could look at it as well. I'm not telling you which way to look at it, but I'm just telling you that those are different things that you could be looking for. In other words, you could look for this in a resistance to form and price to break lower, or you could wait for a resistance to form and price to break higher. Right? I hope that makes sense. Okay. But in the meantime, for ETH, we're coming into resistance and there's just nothing to really do here. Even if we were really to break this, right? Like if we were to create resistance and then we were to come higher, like this is really the only place, this is the only like smooth area to get to. Then we run into resistance here and we could run higher up to 1952, but you know, we just have to see. We'll have to see what price looks like from there. In order for me to get really bullish on Ethereum and for me to think that we're going to be able to come in, even take back some of this negative price action here, we would have to get up here and form a solid base, break above, retest. You know, this would be optimal entry if we were to get something like this, break out, retest this area, and then go higher. You know, if it, who knows if it comes all the way up here, maybe it only fills half, maybe it only fills, you know, up to these wicks here. Who knows? There's a lot of different things that could happen at that point. What was I just doing? There's a lot of things that could happen at that point, so we just kind of have to, you know, I'm not trying to really look too far ahead, just trading with what's in front of me. What's in front of me right now, you know, I'm kind of cool on it. I don't really need to do anything here. I can wait. I can at least wait until London session. At worst, I can wait until New York open to see if we're going to form some resistance in Nuke or if we're going to get on up out of here. All right, so that's Ethereum. Again, I mean, it's not a bad run of candles here. If we can get a close, if we can get this candle to close bullish like this, and then break above this high, we could definitely fill up to the 1950s area. It's not out of the question. All right, so you'd be, and now whether that's enough risk or reward for you, that's for you to decide. All right, okay, so let's go down, break down to Sol now. Go ahead and start this on the daily chart. Same thing. This is how I do my top-down analysis, what it's called top-down analysis. How I do it all the time. Every time I come on the chart, I like to get a fresh look at things and just make sure that, you know, my eyes are seeing correctly and my bias is not being developed, you know, based on what my brain wants, if that makes sense. Because at the end of the day, we are traders and we want to trade both directions. We do trade both directions. And so we have to be prepared for what can happen in either scenario, right? Okay, so as we see on the daily, we have come down and we've created support at $118. We formed some resistance here. We were able to break above that resistance and then came all the way to test this underside. On Friday, Saturday, you know, we obviously kind of pushed up to here, or pushed up to the Friday's highs, but then failed that area, broke down Sunday, closed Sunday bearish, but we closed right back into support. And so far, we have not broken this Sunday's low. So until Sunday's low gets broken, you can anticipate that we're either just going to go sideways or start pushing our way up. If Sunday's low is to be broken, then you can anticipate that we come down lower into the $117 area and possibly even lower than that, right? But let's go ahead and get a little bit further inspection down on the 4 hour here. That's actually pretty clean, I'm not gonna lie. Okay, so this is actually pretty clean price action. So at this point here, we have Broken through support, right? Kind of this close above all of these wicks here is, in my opinion, a signal in a shift of strength, of the market now wanting to maybe start pushing higher. As you can see, over the weekend, we started to push higher but failed, to be expected. So now we are creating this area of support here. As you can see, we pushed lower, could not break this candle's low. Obviously, this was Sunday's low. We've now started to reject this area, and should we be able to finish this candle, a strong bullish candle, you could anticipate if price were to wick down, say you were to wick down and respect this candle low, then you could anticipate that if price were to break above this high here, that we could continue pushing higher. Right? That would be support created, low testing this area but respecting it, and then breaking above the candle high would be a strong signal that we can move higher. Whether we move higher and just take out these highs at 130, and then we maybe we kind of fail here. Maybe we get something like this, that a candle that pushes above this high but is unable to sustain momentum and comes back down. Maybe it does sustain momentum and it continues to march its way up, take these highs or something like that. Who knows? But if we can close a strong candle and then break above this candle's high, you can at least anticipate, I think, that you should be able to move higher. Should we instead create a candle like this that closes here and we wick down and then push higher, right? Say that happens. We wick down and start to push higher, but we can't sustain. And then we start to break back below this candle's low. The candle is just created. And then close down here. That would be a signal then that you could look for a wick to be created. And then this candle's low to be broken. And we could run down to here. To this area at least. Probably down to these wicks. I hope that made sense. So it's a couple ways to look at it. In squiggle form, it could just be here and then we break lower. Or it would be like this and then we can just break higher. Right? We're going to have to see what presents itself. But that's what we would be looking at. All right. I would say right now, the best risk to reward is not shorting until this candle low is broken or this bullish candle's low is broken. Either one. Either Sunday's low gets broken or this candle's low gets broken. Either way you want to play it. Until then, if price continues pushing higher and we get a strong candle close, you can anticipate that we come up this way at least a little bit. All right, maybe we just run back into resistance and fail going into FOMC. Who knows? Okay. All right. And lastly, we'll just do XRP. All right, we'll do XRP. Oh, wow. XRP, again, looking strong. And again, people are going to hate it. It looks strong again. I mean, XRP just gives you so much confidence right now in this market, I think. If there's any asset at this point that is displaying just supreme strength, it is genuinely XRP. So as you see here, we had support at $2, which we talked about in the last video. Support, this is a heavy support area. You can see how many times it's come to test it. We moved away all week last week. 1, 2, 3, 4. All 4 days last week were bullish. All 4 days. Saturday created this little hangman. Sunday had a bullish engulfing. Again, maybe a little bit of a confusing signal because it's happening obviously on an illiquid Sunday. We haven't been able to break this low, which confirms that this support is being created right now on the daily time frame, right? This is now our resistance area on the daily time frame. So we're just consolidating in this very small $2.28 to $2.40 range. Okay, technically, with the lower bound of the range being at $2.02. Okay, and then we have clean price action above here, above 247, up to at least 262 area. And we'll scale down a little bit to get a little bit more precision. So we'll drop down to the 4 hour. Okay, on the 4 hour, you can see here, we double topped, boom, pushed higher, tried to push higher again. This was on Saturday. I'm assuming that was the Saturday's candles. Pushed higher into Friday, wicked above this area, closed bearish, and then Saturday, just continued bearish, boom. Now what we had was price completely stalled out here in this area of support. You see this was a previous area of resistance that was broken as support and retested, right? So we've now retested that area, and we are now creating a strong 4 hour bullish candle. Okay? So what you can anticipate here is for price to, if we were to finish like this, you can anticipate that price pushes down and creates a wick. And if we are to be able to break this candle's high, say for example's sake, it were to finish right here, say we were to break above this high at about $2.35, then you could anticipate that price is going to continue moving up into this. That's a big old dildo. You could anticipate price is going to continue moving into resistance, and even see if we get a strong candle, if then that candle can close and form bullish and continue pushing higher to maybe even take out these highs, right? You obviously see on the 4 hour, we got a pretty strong area of resistance here where price broke down, retested, and continued to push lower. So I would say that this is our first area of real trouble on the 4 hour, so on the smaller time frame, while on the daily, our main area of resistance is at 263, about 263 to 265, right? So yeah, sorry if I was going a little bit fast right there. If I needed to slow it down, or if you need to replay it, definitely go back ahead and replay it. Okay, so that was what we'd be looking for in a bullish scenario. Wow, this is finishing out. This 4 hour is finishing out really strong right here. Now, what we would not want to see is if price creates a low, and then we break above this high, right? And we start pushing up, but then we come back and break below this low, then you could anticipate that we're going to fill this candle down. And then maybe we get down here and break lower, right? Otherwise, you'd want to see this candle high broken, these lows be respected, the next wick be respected, and candle to continue forming higher. And maybe we get something like this, a doji that finishes here, and then we can see some resistance form. Who knows, right? Again, I say who knows a lot because literally who knows? We don't know. For now, we're just playing in this range. You can take it to the top of this range and see if we can show some strength. If you want to hold in anticipating a breakout, or once we got to the top of the range, you can close, anticipating maybe we show weakness, come back down. Right? Does that make sense? Maybe we come down and take these areas out, take these lows out. We'll have to see. We'll have to see what price is looking like, but right now this is actually looking really good. Really good for low time frame scalping, for sure. Yeah, everything's starting to move a little bit. Sweet. We should have, looks like London, pre-London looks like they should be pretty nice. They're at least setting up nicely. We'll have to see if the price action continues to be so nice, right? But all right, man. So that's going to do it. Again, we got a lot of news coming up this week. Monday got retail sales. Tuesday we got CAD core CPI, I think, and then Wednesday we got FOMC. Thursday we got some other, was it like Bank of Japan or something like that? Some other things. Let's go ahead and just take a look at that again. What was Thursday? Tuesday, Wednesday, Thursday, March 20th. Great Britain. We got monetary policy summary. We got USD unemployment claims. Okay, so we just got a lot. And then Friday, even Friday, we got core retail sales for CAD. So maybe that won't be a huge catalyst either way. We'll kind of have to see, but definitely FOMC for the US will be. Yeah. All right, man. I hope y'all got some value out of that. Definitely, if you want me to take a look at any other coins, any other charts, if you want me to do any more breakdowns, if you're understanding these breakdowns, like if you're understanding what to be looking for in these trades, let me know. Leave me some feedback, and let me know if there's anything else you want me to look over, anything you want me to go further into detail with, and yeah. Until probably, I would say, we'll see how Monday is developing. If Mondays get some good price action in, we can come in, do another video. If not, we'll wait probably until FOMC. So Wednesday, maybe we'll wait until after FOMC, come on and see what prices are looking like then. See if there's anything you can get in on Thursday and Friday. But yeah, we'll kind of play it by ear. I want to say for sure we'll be back. For sure, we will be back for FOMC on Wednesday. Whether we get a video in between there, we'll just kind of have to depend on what price is looking like. If we get some nice looking price action and some identifiable trades, definitely we can come back on and look at some things. If not, we'll just have to wait and play by ear. All right. Thank y'all for tuning in. Peace.